How are you? And I want to thank those that are returning for the second time today. You were with us this afternoon and this evening, and now tonight, this morning, for the majority of you, you are here. And I want to recognize those people that are logging in at a very early time in their place. So we want to thank God for you. We are going to continue with what we initiated last week. Does anybody remember what was the topic last week? If you were here, or if you listened to the video, what did we talk about last week on the same day? Please raise your hand or unmute yourself and or raise your hand or write in the chat the topic that we talked about last week. Yes, Rachel. Yes, Rachel, go ahead, unmute yourself and go ahead.
Thank you, Coach. Am I audible enough?
Rachel, we cannot hear you.
Okay.
Now I can hear you.
All right. Thank you so much. We spoke about risk management and insurance, and we understood that the way we can manage risk is actually by buying insurance. And what I got is that insurance is a thing of managing financial risk by transferring the potential losses to the insurance provider in exchange for regular premium payments. And then we also went on to understand the types of insurances that we have, and we covered about 4 of them, which were health, that covers the medical expenses, like maybe in a case of illness or preventative care. And under health, we realized that when you get insured when you are younger, the premium is far much lower than how it is when you are older. And it is actually opposite with the rest of the other insurances that are available. Then the other type of insurance that we spoke about was auto insurances. And then the other one was life insurance and disability insurance. Now we realize that of all the 4 that we discussed, life insurance is one of the most important ones. And it is a good way of building, preserving, and transferring wealth, as it is something that does not cover the one that buys the insurance, but it only benefits the beneficiaries. Yes. So from Proverbs 27 verse 12, we understand that we need to be prudent. It says the prudent see the danger and take refuge, but the simple keep going and pay the penalty. So if we are going to be prudent enough, we'll make sure that we get our families covered by buying insurance. Thank you so much.
Thank you very much, Rachel, for your detailed response to what we talked about. Proverbs 27, verse 12 is actually our key text in what we are talking about when we are talking about managing risk. It says the prudent see danger and they take refuge, but the simple keep going and pay the penalty. Now, for us who are in the United States and are in Michigan right now, there's snow, right? Today was the first day of snow. To some, it came as a surprise. And to others, it did not come as a surprise because they were prepared for it. There was a plan for it. How do you prepare for that? There are many things that you prepare for the snow. Many, many things that I will not bother you with, but the same applies to rain. If you are in a tropical area where rain falls every day, when you go to work, you've got to have an umbrella. And I've seen people that keep one umbrella in their handbag, another umbrella in their car, and then another umbrella in the office. That's what we call preparedness. What it means is that we do not have the ability to stop the rain, but we have the ability to prepare for it. This applies to many things in life that we do not have the power to stop, right? We may eat as healthy as we want, and it is good that we do that, by the way. We must be healthy in the choosing of our diets so that we can push this mortal body as far as we can. But regardless of how healthy we keep ourselves, old age will creep on us. And before we realize it, we are incapacitated and we are unable to work and fend for ourselves. Now, the question is, does old age catch up with us and as a surprise? Is it a surprise? Or is this something that we anticipate? And for real, nobody should ever be caught with old age as a surprise. Now, we can plan for old age when we are young and vibrant. The prudent see old age coming and they take refuge, they prepare for it. But the simple, they keep going as if old age will never come. Retirement, for those that want to retire, retirement is coming. It's an eventuality, it's coming. You cannot stop it from coming. The question is, are you prepared for it when it comes? Children will be going to school. They will require college tuition, right? The question is, are you prepared for it? Because if you are not prepared for it, it doesn't mean that kids will not grow. Kids will keep growing whether we are prepared for them or not. So we can manage the risks by being prepared. The prudent see danger. They see danger coming from a distance. They see it coming and they take refuge. But the simple keep going, but yet they pay the consequences. So it is very important that we understand, like I said last week, there are cultures that don't talk about death because they actually believe that if you talk about death, you are inviting death. But we all know that even if you don't talk about it, it will happen. So the question is, are you prepared for it? And it is never a good idea for a Christian person who calls themselves a child of God to be caught by things that we know will happen. It's never a good idea to be caught by surprise because they are happening. So we need to prepare for them. Every machine that we have in the house, including dryers and washers and stoves and fridges, they are not immortal. One day they will malfunction. And when they malfunction, the question is, are you prepared for it? The prudent see that these things are not immortal and they prepare for it. What I've seen the prudent do is that they don't wait until the thing malfunctions, right? They stretch it as far as it can. But then the moment it starts giving problems, then they replace it. They sell this one and they buy another one. Why do they do that? Because they've been preparing for it, right? So the same applies to insurance. Rachel correctly described what is the purpose of insurance and what it is. You are transferring risk, right? Transferring risk from you to the insurance provider for the exchange of premiums, monthly premiums, or quarterly premiums, or biannually premiums, and yearly premiums. They are saying, yes, if something was to happen to you, we will pay the beneficiaries this sum of money, but you gotta pay us on a monthly basis now. Now, we talked about 4 types of insurances, but today we are going to talk about, we're going to focus, like I promised, on life insurance. Life insurance. And we are answering the question, or we are looking at the types of life insurances and their importance. They are not all the same. They are different. And we have to understand the difference, right? Imagine all this time I thought I had my video on. All right. So we're going to talk about this life insurance. You know, with life insurance, there are many cultures actually. There are some people that don't even want to take life insurance. Right. The reason is that, number one, they believe that it's not going to benefit me. So why should I take on a responsibility that I am not going to benefit from? And that is a sad reality for many. And I'm sorry to mention this, but this is part of who I am, right? I'm an African, and that will never change. And if we want to be successful, we have to tell each other the truth, and we have to embrace that truth so that we can move from it, right? What I'm saying is that the majority of Africans, or even Black people in general, right, they don't want to take life insurances for the sole reason that they believe that since it doesn't benefit me personally, then there's no need for that. Whoever I live when I die, they should work for their own money. That mentality there has caused us as a community to lose out a lot on the advantages of life insurance. It is one of the greatest tools of wealth building. Please write that down. Life insurance is one of the greatest tools for wealth building. You may not have money in the bank. You may not have an investment portfolio. But one thing that you must have, if you are one person that is the laziest, saying, I don't want to do much, I just want to do the bare minimum, then you must have life insurance. Here's why. Because you are transferring the risk to the insurance company for your own death, that when I die, when you die, the family that you leave behind will be better off financially than they were with you alive. Now, I don't know about you, but any decent human being, any decent mother, and any decent father would want to leave their children or their families better off financially. I don't know about you, but God actually requires it from us. God requires it that we provide for our families, not only when we are alive, but even after we are dead. Could those with administrative privileges, please, there are people that are trying to join in. Right. We have to ask ourselves, if something was to happen to me today, how financially prepared would my loved ones be to handle the situations? Right? How? If something was to happen today, now, if I were to be knocked by a car, is my family covered? Right? If I was to be incapacitated, will they be covered? Right? The Bible says in Proverbs chapter 13, verse 22, a good man, a good person leaves an inheritance for his children's children. That's the mandate. You leave, which means that you're no longer there. You're gone, but you leave behind an inheritance, something that the family that is left behind will be covered by. So it is failure when we die and our children inherit bills while others are inheriting wills. Right? It is not a good thing. It's a total failure when our children inherit debt. Right? And others are inheriting portfolios. Right? Our children inherit things like clothes and shoes. Clothes that's full of clothes and shoes, right? While others are inheriting stocks, dividends. So we are looking at life insurance. So the first life insurance or the first type of life insurance is what we call the term life insurance. Term life insurance, right? What it does is that it covers or it provides coverage for a term. A term is a specific period of time. It could be 10 years, it could be 20 years, it could be 30 years, it could be whatever years that you choose, right? So if the policy holder passes away during or in between the term, if it's a 30-year term, if the policy holder dies within that period, right, the beneficiaries receive a death benefit. And that death benefit is stipulated on the policy based on the premiums that you are paying on a monthly basis. If it's a 10-year term policy, If you die within the 10 years, then the beneficiaries receive a death benefit payout. Right. Now, the important part is that it's term. And there are people who have made mistakes of buying a term policy and then just file it somewhere without understanding that it has an expiration date. And then they die after the term is over. And then only to realize that the beneficiaries realize that when they go to the insurance company to be told that, no, this policy lapsed in 20 years ago, or 3 years ago, or 4 years ago, and there is not even a penny you're going to receive. Right. So what does it cover? A term life insurance or policy it covers funeral expenses, right? Debts. If you had a debt with whoever, it covers that. So if you have a credit card debt, if you have a mortgage, if whatever debt it is, it will cover that, right? And also, some have an educational fund in them, so that when the insured person dies, if they have young kids, the insurance will pay for their education until they are done with school. That's a term, right? Please write. I hope you're writing this. It's a life term policy, right? It's a term. The key word is term. Now, they are cheaper and they are affordable. They are simple to set up. But I want you to understand that they are temporary because of the term. They're temporary. If you really want real coverage, you would want something that is not temporary, because you are not guaranteed to die within the term. Nobody knows when they're going to die, right? This may work for younger couples who are saying, hey, we are young. We just want to cover the first 20 years of our lives, where if we die within the 20 years, our children are minors. They're minors. So we want to ensure that if we die, then they will be catered for until they are adults, right? So they are covering a term which is, according to them, the most risky period for their families when their kids are minors, right? So that's why they do it. So it covers their children's education. It will pay for their mortgage, so the kids will have a place to live, and things like that. But I want you to understand that if you have a policy, ensure that if it's a life term policy, know which year it ends, so that you can have contingency plan for when it expires. The second type of insurance is called a whole life insurance. Whole life insurance. Like, again, today I'm giving a general overview. We could go in depth. We could just have a session for each one. But in the interest of time, I'll just give you the general understanding of it, so that you can have a general know-how. So you can ask even your insurance agent if something that I say here concerns you. Right? You may not know, may not have known that. So the second one is a whole life insurance policy. Now, the term is a whole life. It's very important. It's not a term, right? It's a whole life. So it covers you for as long as you are alive. Or let me say, it covers your whole life. It doesn't matter where you die. You can die tomorrow, you can die after 10 years, you can die after 50 years, you can die when you are 101. It keeps covering. It doesn't matter when you die, right? So just as a term life, but it has additional benefits. For example, cash value. What it means is that when you die, they're gonna give you a lump sum. Now, but not only are you gonna get that lump sum at the end, but during during your life, you can actually borrow against your insurance, and you do that tax-free, and also the interest is very low. So that's one of the benefits of the cash value part of it. You cannot do that with a life term, right? So you are guaranteed death benefit, regardless of when you die. Your beneficiaries are guaranteed a cash benefit. And then that cash value that I talked about, it increases in value as years go by, right? But also one important thing is that it has fixed premiums, which means that it doesn't change the premiums. Some insurances change the premium. They can say to you, hey, pay $10 a month, and then you sign up for that, but you don't read the fine prints. In there, they will say that after every year, it keep increasing, and then you end up paying way more, right? So, but the whole life has fixed premiums. And again, I say that the laws on these insurances differ from country to country, and also from state to state if you're in the United States. So I'm just giving a general overview, but you would have to ask your own insurance provider or the agent about specific benefits to that. You would have to ask your own insurance provider, right? And then the third form of insurance is universal life insurance. Universal life insurance. This one is one of the best. You've heard people say that there's insurance that acts as a bank. You can be your own bank. This is the insurance here. It's very good. It combines the coverages of a lifelong coverage, but also the flexibility in premium payment and in death benefit structure. So you can tweak it. It's very flexible. You can tweak it according to your own goals. It's very flexible, right? It also includes a cash value or component, which is very good because it's linked to interest rates. The whole life doesn't do that, but this one is actually linked to interest. So you can actually, it's like an investment portfolio, right? You actually, the death benefit is not fixed because it relies on the performance of the markets. So you can end up, if they do good investment, you can actually end up with a lot of money, right? Which they always do. They don't invest in risky vehicles Now they invest in very low risk investment, but every investment has a percentage of risk involved in it. But I like the flexibility of it, that you can tailor make. If you have goals, you can tailor make it to suit your own personal goals, right? And it builds cash value over time. Now, the cons or the disadvantage is that if the markets are not performing well, right? Let's say that it just happens that the time that you die, the markets are not performing well, which means that the payout or the death benefit is affected by that. So it will actually affect your payout. And the other con is that it's complex. It's not easy to set up. Sometimes it's not easy to understand. You have to educate yourself on it so that you can ask your agent good educated questions. Otherwise, they may structure it to benefit themselves, right? So it is very important that you educate yourself on it, or hire a professional to ask questions for you based on your coverage goals. Now, the next one is what we call the variable life insurance. Variable. It offers lifelong coverage, but with options for cash value growth, allowing the policyholder, listen, it allows the policyholder, to invest in stocks, bonds, and mutual funds. Right. Again, it's like you have an investment portfolio. And based on the markets, you can actually earn quite a lot over time, because every premium that you pay, it's put in an investment portfolio, and the dividends are yours. Of course, they take some from it, but you gain quite a bit. Now, it has the highest growth potential, which is very good, because of the areas they invest this money, these premiums, right? So, of all the insurance policies, this one has the highest cash value growth potential, right? And the death benefit increase as the investment portfolio increases or performs better, right? The disadvantages are the same with the one that I talked about, which is that with every investment, there's also a potential for risk. So volatility is reality, right? So you pray that you don't die when the markets are down, because the payout will also be down, right? And then, because of the investment part of it, there are fees that are paid for its management, because they have to hire qualified and certified financial advisors and financial managers to manage your money, and that doesn't happen for free. So there are fees associated with it. Yeah, but I've realized that most financially savvy individuals, they buy this variable life insurance policy if you know what to do and where to invest, because you are in control, right? And then the final, which is the fifth, We call it the final expense insurance. Final expense insurance. These are policies that cover things like funeral costs and medical bills, right? This is very important. Final expense insurances. If you don't want to bother people with GoFundMe, then this is a policy to have. It's one of the cheapest, the most affordable ones, right? Where you can pay. If you start early, you can actually pay way less than $10 per month. But should you die, then you know that all your funeral expenses, and if you incurred medical expenses prior to your death, which is usually the case, they'll cover all that as well. So any cost related to your illness prior to your death and the funeral costs, everything associated with your funeral, this will cover, right? There are many companies that provide that kind of insurance. And like I said, it's very simple, and the approval is very easy. Usually they don't require anything. Most of these, you don't even have to do medical or anything. It's just you fill on the internet, you submit, you are approved, and you start paying the premiums. And regardless of where you die, they just notified and they take over, right? But the con is that the coverage is limited to death only and sickness that happens prior to death, right? And there's no wealth building potential in it, right? This is where this is what I believe that every adult must have that. Especially if you don't have any one of the ones above, at least have this, so that your funeral costs are covered and any medical bills that you incurred prior to your death are covered. Then people are going to mourn you just because you've died, and they'll miss you. But they are not wondering, what are we going to do after they're gone? So because we have a few more minutes, I want us to look at the wealth building and wealth transfer aspect or role of insurance, right? The wealth building, wealth transfer, role of wealth building. Now, like I said, it is one of the greatest tools to build wealth. What does it mean? It means that you could have lived a life of poverty, but had an insurance policy with a death benefit of $1 million, right? You could have lived paycheck to paycheck yourself because your income was not enough. But the day that you die, your family, the insurance company will distribute to the beneficiary $1 million. Now, there are people that are doing this. Like I've said before, I think I've given an example of a young man in Detroit whose grandfather and grandmother died the same week because of COVID, right? And he was living with them, right? And unbeknown to him, all he knew is that they told him that there's a will, in their will, he will receive something from them. But what he didn't know was that they were actually leaving everything to him. Now, the first thing that he realized was $5 million. But what he didn't know, so when he received the first $5 million, that's when he reached out to me and said, "Hey, please, can you come to Detroit and help me? I want to sit down with you over the weekend, and I'll pay for you to come here. I'll put you in a hotel. I want to sit down with you so you can tell me what to do with it. I don't want to be poor." And again, so I went there. So while in that conversation, I asked him questions. I said, I asked quite a lot of questions about insurances and all stuff like that. And then he started digging, and he discovered that there were 2 insurance policies, right? Which he was also the beneficiary of. He discovered that even the business, they had a very successful business. The business and everything that was in the business, which was in millions of dollars, were also his, right? And quite a lot of other things that they had. Right. So, what we learn from this story is that this young man became a multi-million dollars in a single day, right? He was a bartender, but he became a multi-millionaire in a single day, right? A year later, he got married, and once a year, he asked for advice. We planned for that year, and he's been managing this money very well. Actually, he has not even touched any penny from that money. Guess what he's surviving on the interest of one of the portfolios, just interest only, because of the size of the portfolio, right? So what it means is that if he stays like this, he will never be broke again. Secondly, his children will never be broke again. Why? Because a grandfather and a grandmother not only were able to build, but they were wise enough to transfer money, wealth, including payouts from insurances. Money that was distributed in these insurances, it's money that they never saw, but they gladly offered that to their grandchild. We don't do that. Sadly, we don't. But gladly, you are here. We say here, you may not have come from a successful family, but a successful family must come from you. You may not have inherited anything from your parents, but your children must inherit something from you. The idea of just dying and leaving our children without anything, it must be something of the past. We must build and preserve and transfer wealth to the next generation. Right? There's a verse that I want us to read, which is 2 Corinthians chapter 12, verse 14. Please mark this verse. 2 Corinthians chapter 12, verse 14. Paul says within that verse, after all, children should not have to save up for their parents, but parents for their children. We especially, again, I'm sorry to say, but this is the truth. As a majority of us, Black people, we don't understand this, that biblically, the Bible says children should not have to save for their parents, but parents must save for their children. In our culture, we look at our children as our inheritance. Yeah, my children should look after me. Yes, there's nothing wrong with children doing that out of their own good hearts, if we empowered them with the resources to do that. It is our responsibility to save up for our children. That's what the Bible says. That's why it says again, a righteous person leaves an inheritance for his children's children. That's the same principle. It's not the children who are saving for their parents. No, it's the other way around. Yes, the Bible says, children, honor your parents. Yes, they have to. But when it comes to saving, it is our obligation to do so. So choose the right financial instruments, the right insurance, build wealth, yes, start businesses, yes, but hey, protect your assets. So next week, we're going to talk about the preservation of it. Like I said before, some people make the mistake of listing their minor children as beneficiaries of these insurances. And we're going to talk about that, why you should not put your child as a beneficiary of your insurance if they're a minor. By minor, we mean if they are less than 20 years old, and some insurances less than 21 years old, because they may not benefit from it. And we're going to talk about that. And we'll talk about the need for the creation of a family trust and its importance in the wealth transfer equation. So may God bless you until we meet again next week. And for now, we will leave time for questions so we can answer them.
Thank you so much. Thank you so much, Coach Isaac, for this informative session. I know we have all benefited, and we are still digging deep and wanting to know more about this. So I'd like to open the floor. If you have any questions, please type in the chat or unmute yourself. And Coach Isaac will be happy to answer your question. Thank you for your participation in the chat. Thank you so much, Rachel, for taking these notes and helping us stay afloat while the session is continuing. Thank you. Beatrice says thank you. Do we have any other comments, questions? It's your time, the next 1 minute. Please feel free to ask your questions. And if not, we will wrap up with a word of prayer. So I will start praying in the next couple minutes.